Hey everybody, let's have a look at this question then. We have done part one before, note one before, but I just want to go to note two because this is the foreign subsidiary stem, okay? So there's the bit that we need to know about, and as usual, we're going to get straight on with year-end, acquisition, post-acquisition. Remember the foreign currency first, whatever's in their equity, so what's in their equity? Just share capital and retained earnings of 200 and 300. So 200 and retained earnings of 300. So 200 goes in there. Retained earnings then, at acquisition, I'm looking for the retained earnings were 220. Super. I don't put in though any post-acquisition, do I? I just add this down, 420. I compare that to the fair value of the net assets, which was 495. So I've got a difference of 75. I want to know what that is caused by, and he tells me somewhere it's due to an increase in land, which is excellent news then. So land increase 75. Now I can start doing the post-acquisition by translating it. We acquired it on May 10, so that's acquisition, and I can tell you that April 11 is the year end. So the year-end figures then I will do first. So 200 divided by 5 is 40. 300 divided by 5 is 60. And 75 divided by 5 is 15. And I would go and put the 15 then onto their land. Now, look at their land, PPE. I would have to translate that at the year end, that at the year end, current assets at the year end. Don't bother with share capital and retained earnings. Share capital I'm not at a cost anyway. Retained earnings we dealt with in the equity table. I translate that at the year end, and I translate that at the year end, and then I'll be able to add it all across. So you'll be able to do that when we do the question in full nearer the end of the course. At acquisition rate then it's 6, so it's 200 divided by 6, which is 33. It's 220 divided by 6, which is 37. And it's 75 divided by 6, and that I'll call it 12. So we've made a post-acquisition gain of 7 there, a post-acquisition gain of 23 there, and a post-acquisition gain of 3 there, giving us a post-acquisition in total of 33. Cool, so now we can crack on with goodwill. Fair value of consideration. Remember, this is all in which currency? The foreign currency, isn't it? So the fair value of net assets acquired is the 495, the foreign. Fair value of NCI, I need to find out what it was. The fair value of NCI was 250, super, I can put 250 in then. And finally, I want the fair value of consideration. Does he tell me what that was? No, he doesn't, so I need to go up here, and I see that STEM, the foreign, cost me 46. So the fair value of consideration would be 46 times by whatever it was at acquisition, 6. So 46 times 6 is 276, I think. So now let's calculate my goodwill then. So 276 plus 250 minus 495 in dinars gives me goodwill of 31 in dinars. And I need to translate that at acquisition. I need to translate that at the year end. So at acquisition would be 31 divided by 6. So let me do that. 31 divided by 6 is 5.17, and at the year end it would be 31 divided by 5, which is 6.2. So I've made a gain, a goodwill gain of the difference. So the difference is 1.03, and I'm going to give some of that to NCI and some of that to retained earnings because we're doing the fair value method. But goodwill is 31, so I could go up to my question here and I could turn that straight in to goodwill of 31, and I'm well on my way. Let's have a look at the NCI working then. So NCI for STEM would be at acquisition plus post acquisition. So at acquisition, I've got here 250, but that is in dinars. So divided by the at acquisition rate of 6. So 250 divided by 6 gives me 41.7. Post acquisition then, I need to know how much I acquired. I acquired 52, so post acquisition would be 48% of whatever I've got in my post acquisition column, 33, look. So 48% of 33, let me just put that in, so 33 times by 48% is 15.84. Then I'll also add on some goodwill gain, okay, and that's that goodwill gain here of 1.03, so 48% of 1.03, and that will give me 1.03 times by 0.48 equals 0.49. Add all that down then, and that would be the NCI for STEM, 41.7 plus 15.84 plus 0.49, that gives me 58.03, and I'd go put that, either add it on to the NCI that I've got already or give it its own heading. Retained earnings, okay, we'd already have H or whatever it was, and then another subsidiary, whatever. I'm looking at STEM here. So in terms of STEM, I would give it 52% of the 33, the post-acquisition. So 0.52 times 33 is 17.16. And you'd also give it the goodwill gain. We get 52% of that, so 52% of 1.03 is 0.54. Okay, obviously I can't add it all up because there'd be lots more of H and lots more of the other subsidiary going on. I've just given you the extra little bits that you need. Okay, so that is pretty much how we would do foreign exchange, and you'll see it again when we do a whole question later on in the course.